All right, welcome back to High on Utah. I'm Heather Groom, and today we have a very special guest. It's Eric Smart with Aries Mortgage, and he and I have known each other actually for quite a while. He's one of my awesome preferred lenders, and I call him up a lot of times just to chat with him about what is going on in the market and some just because things are changing actually quite a bit right now. So
Yeah.
I want to introduce you and maybe just take a second to introduce yourself real quick and let
Oh,
everyone know a little bit of background.
this is the hardest part. Um, introducing oneself when
Yes.
I don't even know if I know myself. So I've been in the mortgage business. This will be my 25th year doing mortgage loans. So I've been able to see a lot of mortgage
25
cycles.
years.
Yeah, it'll
Okay.
be 25 years of knowing
Wow.
better
Yeah.
this year. Um, so I've seen some ups, I've seen some downs. I've lived through a little bit. Um, I live in Lehi, Utah, and I actually work out of Heather's office in Orem,
That's
Utah,
right.
at Keller Williams. And it's an amazing experience. I've known Heather for feels like a long time now. I feel like we're kindred
Yes.
spirits, Heather
Yes,
and
we
I.
are.
Um,
Yes.
so I feel like a lot of her motivations to help and serve others, and especially helping them find the best deal in real estate, is something that I really believe in.
Yeah.
Um, and I'm always wanting to find something a little bit better for the clients.
I love that. And that is one of the things I love about Eric is that he kind of works through situations and on a case by case basis and is like, okay, let me think if there's a better way to do this. So
Yeah.
that's great. Okay, and we're going to make this fun, by the way. So you maybe know we're going to talk about mortgages and maybe your eyes are glazing over right now, but I'm going to say, hey, wake up because we're going to also make this a little fun as well, energetic, and, because there are some exciting things in the market, there are also some not very exciting things in the market. So I just wanted to talk to you a little bit about, first of all, even for experienced people, whether you're a first time buyer or maybe you already own a home, I think a lot of people are just confused about the mortgage process. They don't really understand start to finish. Like they know there's some underwriter that's out there in the
Yeah.
sky, like the Wizard of Oz kind of stuff, and they don't know, kind of how everything moves forward. So maybe just kind of share with everyone kind of the like kind of basic process, and then also maybe some things that maybe people don't realize or know about that process.
Yeah. I think whether you're a seasoned home buyer and you've gone through a few homes, or you're a first time home buyer and you're just kind of stepping out into the unknown
Yeah.
of buying a home, I think there's some crucial first steps that people take for granted because it's probably the hard work
Yes.
of getting qualified to buy a home, and that's the pre-approval process. Um, so the things that are critical to me are doing a complete loan application and really having a conversation about goals and how those
Hmm.
goals can turn into outcomes, and really getting into the fine details of what we're hoping to accomplish, whether it's buying an investment property or again
Hmm.
first time home buyers, and getting into your newest property.
Cool, and I love
Um,
kind of jumping in right there. I'm going to jump in a few times
no,
because
you should
yes,
jump
I'm like I
away.
know Eric, but I do a lot with first time investors
Okay.
as well. And as you know, because you've done that, and there's sometimes some slightly different rules to that, and there's different, and I love that you just said about the application process because I've had clients that sometimes have tried to skip certain steps,
Yep.
and then we don't know until later. It's like, oh, well, wait a minute, that's going to be a little bit of a problem. So I do think that transparency with your loan officer is completely important because you've got to lay it out there and say, okay, here's, especially if you're getting into like self-employment and
Yep.
things like that, you've really got to be really good about getting all that information. People are like, this is hard. This is a lot of work.
So yes, so that's usually the question is,
Yes.
you're asking me to fill out the equivalent, the 20 questions equivalent, of mortgages, which is all of your background for your income and employment, your housing history, We look at your credit history and not just how you've been paying your bills, but how much your minimum monthly payments are with
That's right.
certain bills. And it gets tedious sometimes, it feels like. And the
Yes.
reason that we want to get into the weeds of who you are financially is this boogeyman that Heather mentioned earlier called the underwriter. Their sole job is to
Yes.
evaluate your risk for not repaying a loan.
And the banks. Yes.
Yes. So they
Yes.
they work for the bank and they want
100%.
to they're paid to protect the bank's money
Yep.
is what they're for.
Hmm.
So what we want to do in the initial stages of getting you pre-approved is uncover all of the stuff about you, the positives and the negatives, and create a structured plan so that when the loan gets to the underwriter,
That's right.
the exciting part, right?
Yes.
When the loan gets to the underwriter, we've already taken into account your risks and how to overcome any of them in the most efficient way possible. And
Hmm.
that's what makes underwriting processes really quick, really smooth,
Yes.
and a lot less painful when you're under the gun of being under contract to buy a home
Hmm.
and the pressure's on and your anxiety's at an all-time high
Yes.
and you're losing your mind and you're like, oh, why do they need to see my pay stubs? Right?
Right.
I provided a pay stub 6 months ago, even though I get paid every 2 weeks,
Yes.
right? You'll understand why, and we'll have it all dialed in, and it'll be a really quick 10 to 14 day process. And you'll either have your first or new investment
Hmm.
property, or you'll be in your first home, but you'll be ready to roll. So that little bit of extra time that
Yes.
you take up front to get things right and dial things in will save you so much time,
Totally.
effort, and most of all, anxiety when
Yes.
you find the home that you want to buy. It's just probably the most crucial
I
part of the
agree with that
process.
because so many times people see something online and they're like, we got to hurry and make an offer on this. And I'm like, okay, we got to rewind. We got to make sure that you are completely qualified for this. We've already thought about if something happens, like, or what are some areas where maybe an underwriter will have some problems. So
Yep.
that is so important. And I tell people, I'm like, you know what? Get completely pre-approved, know where you're at, and then that way there's no surprises, because the times that I have had surprises are when people are like, I didn't think that they would have a problem about this piece of income that I had, or even, or that I'm paying off something
Or
or whatever. Surprise. Yeah.
here's a big one. So, firstly, when we have our first conversation, I like to call myself your financial priest.
Yes.
I want you to tell me
Yes.
everything without
Totally.
reservation.
Yes.
I'm not going to
I've
judge
had a
you.
few clients like this that have not been completely forthcoming
Right.
on some things.
So
Oh, that bankruptcy 5 years ago.
I
Yes.
just had one.
Yes.
Where and I gave them the speech. Tell me everything so I can help design a plan that's just right for you.
Yes.
And what they didn't tell me was they pay child support.
Yeah.
So
Yes.
what happens is the underwriter gets into the loan
Hmm.
and they pull a report in the background and it shows that they've had a divorce and it wasn't disclosed to me. Divorce, no big
We could do
deal.
an episode, by the way, just on divorce.
But
But yes.
the divorce decree shows that this person pays $3,000 a month in child support,
Yeah.
right? Which that okay,
Yes.
cool.
It's what it is.
We wouldn't have put them at the purchase price that they got into had I known that they had that debt
Yes.
there that needed to be paid for the next 7 years, right?
Right.
Until their child turned 18. So had I known that, we could have just dialed things in and went a different route,
Yes. Yeah,
right?
and that's the thing I've learned
Yeah.
with the divorce situations. Last year, I actually had quite a few clients. Actually, the last 2 years, I had a lot of kind of death and probate, or sorry, probate and divorce. And so,
Death usually
yes, death
comes
is the same, right?
before probate.
But
Yeah.
but I've had some, and I had several divorcing clients, and some of them were like, oh, or maybe we're not getting a divorce, or sometimes, I'm like, hey, just let me know what it is so that we can give you a plan.
Yeah.
Because if we just know what the situation is, or if you're filing for divorce in a few months, or if it's this or whatever it is, just lay it out there. Like transparency.
Yeah.
Because Eric is not the one that's making the decision, but he's helping to create your plan and your package to basically say, here, this is why you need to loan money to this person.
Yeah. And when you're talking to your loan officer, there's no shame,
Yeah, no,
judgment.
They've seen everything. I bet you've seen a lot of stuff in
I-
25 years.
I've seen a bit. Yeah, I
Yes.
bet there's a bit more that I'm gonna see.
Yes.
But I have my own personal issues. I don't need to judge you on things that you're going through in
Right.
your life when you're trying to better your life by buying a home.
And whatever you do, by the way, because I have had this happen too once. This is just a little tip, right?
Yeah.
Little hack. Don't quit your job. Okay? Don't quit your job.
Yeah.
And
Yeah.
start a company. Like,
Yeah.
so if you're thinking of doing that and you're about ready to close on a house, or like if you're about ready to do that and you're like, well, I told my employer that, hey, I'm, going to be starting my own company. Because I've actually had it like 1 or 2 times, because they will do like an employment check right before closing to make sure you still have the same employment. Okay.
Yes.
So that's just a hack. So I just wanted to throw that out there.
Every single time, without
Yes.
fail, they're gonna
Yes.
do a last minute verification of employment.
Yes. So don't be
Yeah.
saying any. Yeah.
Yeah.
Just don't. You just
Give
need
it a
to-
couple weeks.
You got to
Let
kind of like think it out. Think this out. And if not, ask me, and I can, kind of guide you on that. But I can
Yeah.
give you some, good situations and what not to do.
Yeah.
So, and same thing with you. I mean, that's what I think you've been really good at, because I know I've only had 1 or 2 of those situations, but I've also stopped a few of those situations from
Yeah.
happening where I'm like, whoa, if you want that house, you need to hold on a second.
Yeah, big life changes need to be talked about.
Yes, exactly. So, okay, so that's interesting. And you're not the decision maker as far as like, you're the one that is putting the package together.
I'm the decision facilitator,
Yes.
not maker.
Yes. So don't come and kill the messenger kind of thing, right? So,
Yeah.
but there's ways that we can work in a positive way with the underwriters, because people feel like the underwriters have like fangs and, all things. But it's like, okay, their job is to be molecular. That's what I tell people. I'm
Yeah.
like, their job is to be that, and so anyway, so, well, okay. So loan process, let's also talk about like this year even, because we're heading in, we just had presidential inauguration. And that we're going to have some changes, I think,
Yeah.
this year. I think, people are excited and some people are really nervous. I think you've got a little bit of mixed emotions, and we're going to see some changes. And so, I'm not going to hold you to it, but like, what are some things that you're hearing, and kind of, what might be some of those changes for 2025?
So I think 2025. Yeah, it's interesting. I'm a terrible prognosticator, so whatever I'm going to tell you, probably just run the opposite way. 2025, from what we're seeing in updates from Fannie Mae, should be very, very similar to
Yeah.
2024. It's the first year of an administration, so there will be changes. I want you to think about the way that mortgage rates work,
Mhm.
very similar to buying and selling stocks.
Yeah.
So, the more people buy bonds or treasuries or sell bonds and
Mhm.
treasuries will affect the up and down of interest rates. There's a few other factors that go into that, but the talking points from the administration
Yep.
and other key points of the economy are going to either help investors buy bonds or sell bonds, which directly impacts how interest rates move. The general expectation, though, is that interest rates are going to circle or swing in the same way in 2025 that they did in 2024,
Yes.
which
I called the year of whiplash, because I felt
Yeah.
like we would kind of like start, stop. Kind of, it was like, people would be like, "Oh, rates are dipping," and I would see my production just kind of go a little bit down when all of a sudden rates shot up. It'd be like, okay, people kind of were in pause mode, And then I was like, hey, actually, you shouldn't be in pause mode because you can get a really good deal right now.
Yes.
And so on purchase price, but we'll talk about that in a second. But then I kind of felt like last year was a little bit of whiplash. I've heard we've already hit kind of the low, at least according to when I've gone to some meetings with Gary Keller. And, they're saying, okay, we probably have hit our low. We're kind of on this slow trajectory. But I think a lot of people out there just think things are going to change overnight. It's like, oh, we've got this new president, we've got things happening, and woo, okay, everything's going to change overnight. And I'm like, not so fast.
I think what we're going to see is we're going to see a slow trend down in interest rates
Yes.
as we
agree.
progress through the current president's term,
hmm
right? If they did it and they dropped rates from 6.875 down to 5.5 within the space of a week,
Oh my gosh, I can't even.
well,
it would be crazy.
it would be
like,
great for you and I.
well, there'd be some good and bad ramifications.
But for the economy as a whole,
Yes.
that's not good.
Economies like predictability, and that's what I tell people all the time. They want, like, economies thrive when there's slow growth
Yep.
and nothing happens too quick, too soon. And so, that's why I think this year is actually, it's going to be a better year than last year, just because we have hit the bottom. Because those rates, I think, will slowly go down. It's going to be a slow process. And maybe by the end of the year, we're going to see a little bit like, okay, this is great, in time for maybe fourth quarter or something. But really, and we're going to talk about why not to just hinge your decision making on interest rates. That's probably going to be our next question, but definitely. So sorry, I had to interrupt for a second.
No, that was a good interruption. Nobody better at interrupting than Heather Groom. It's a pleasure to be interrupted.
Oh, well, thank
by
you.
Ms.
But
Heather.
I just wanted to say that what I saw last year, and I mean, we because we're partners basically in this,
Yeah.
so it's like, I know a lot of the things that you're dealing with, but I also, and then what I'm seeing. So it's like you work a little bit in tandem, but it's, I would just see kind of people's decision making being impacted by even, a small little blip in interest rates, whether it was up or down. It all of a sudden, I would get 10 phone calls on a listing
Yeah.
when just rates dipped, even less than a quarter point or something. It would just be like, okay, then all of a sudden a flood of people, and then kind of, it ebbs and flows,
So my thought would be buying right now is trading some temporary pain for a lot of
Totally.
long-term gain. And if you think about when you want to buy something, so you want to typically um, buy low and sell high.
Yeah, like stocks,
Yep.
right?
Yep. Just like stocks. Same thing with buying a home. Same thing with interest rates. Interest rates right now have leveled off the appreciation rate for homes. So
Mhm.
by level off, it's still investment wise.
Yes.
If you're a cautious investor and you're not like into like serious heavy trading,
Right.
if you're making a 5 to 7% return on your money,
Mhm.
that's good business.
That's great. Yeah,
Like
absolutely.
really, really good business. Now, if you're making 5 to 7% year over year on a $600,000 asset that you have,
Mhm.
right? Push that out to 10 years and tell me if you're worse off.
Well, or those people that have said, I'm going to buy an investment property next year, and or their primary property. We both know this,
Yeah.
right? And it's like, I had a friend. I don't know if I've shared this story, but I mean, they waited 15 years to buy something. It's like you could wait a long time and justify it because you can say, oh, there's too much competition in the market. Oh, the rates are high. Oh, and because no matter what, there's a little bit of a positive to every market and there's a negative, right? And so, there's like right now, purchase prices are low. So that's why I'm telling and like shouting, buy now, because I would rather my clients get in at a lower purchase price. And, like you're saying, your rate might be maybe higher and a little bit of some temporary pain. And there's ways that we can even solve that. Like I've had like times, maybe we can talk about even like a buy down or something. But even if you just set aside a little bit of money and then offset your payment, and just mentally know that, okay, this $6,000 I'm setting aside in an escrow account, it can, help my payment.
Or
Yes.
wait, before I hop onto this, you people waiting always reminds me of my favorite meme, which is the person that's a nice healthy human being in 2016 that's like, I'm gonna wait.
Yeah.
And then in 2023 they're just a complete skeleton, right?
Yes.
Because they waited too long and it evaporated. Real funny.
Yes.
Yeah, I'm laughing.
Yes. Yes. I get that.
So my thought, so seeing credit reports every day of my life for the last 25 years, the thing that really has stuck out to me of where people are putting their money is I've seen car payments go from
Oh,
$130 to $800 to $1,000.
$900.
Yeah. So
Crazy.
if we stepped back in our card level, and there are a lot of savvy people out there that are doing this.
Mm-hmm.
If we step back on the level of the car that we're going to drive around while not looking as cool in the Camry
Yes.
as you are
In the Land Rover. Yes.
or the 5 Series,
Right.
right?
Right.
You're all of a sudden, though, going to be able to afford an asset that's going to appreciate as opposed to depreciate.
I love that you said that, because people waste money on depreciating assets.
Yeah.
And cars are depreciating assets. Unless
Yes.
you're buying a Lamborghini and not putting any miles on it, then maybe.
As soon as you're off the lot, right,
Yes.
there's a straight down.
There's a complete decline of a few $1,000s,
Yeah.
and I tell people that same thing with like furniture, and things, because I do have a furniture business too. And on the side, like, people are spending all this money on furniture, like they're newlyweds, and they're like, oh, I don't want to replace it later. And I'm like,
Yeah.
yeah, you do. You actually do want to replace it later.
You will.
Buy cheap, go to Facebook Market if you're a first time home buyer. Buy free stuff. I have free stuff. By the way, if you need some stuff, I'm always getting rid of some stuff, in my house. So I'm like looking for college students and things. I'm like, here, you want a kitchen table? Here, just come pick it up and take it out.
You heard
know
it
what I
here
mean?
first.
Yes.
Heather Groom is giving away her stuff.
I am.
She
No,
is
I
becoming
really
a
do.
Sherpa.
Yes.
And moving to Nepal? Is it Nepal
Yes.
where the Sherpas are?
Yes.
Okay.
Yes, as a matter of fact.
Sherpa
but-
Groom?
Yes,
Yes.
but I am just like there's so much out there that you can. So it's like, don't think that buying a depreciating asset and spending a lot more money, because I hear these, like, I can't tell you how many of the newlyweds that I've talked to, and they're like, oh, but we don't want to have to rebuy stuff later. And I'm like, you're going to want to buy stuff later. Like, don't even
As a
think about
senior
it.
in high school,
Yes.
I thought the 1995 Jeep Grand Cherokee would never age out.
It was it.
I thought
Yeah.
that was the car that I'm gonna get,
Yes.
and I will drive it for the rest of my life.
Yeah. We do not live in that
95?
society anymore. No.
95 Grand Cherokee has not aged well.
Yeah.
Has not.
It's probably worth
aged well.
$3,000, $2,000 maybe.
In
I don't
Utah?
know. Maybe.
Maybe?
Yeah.
Yeah.
No, that's exactly it. So I'm like, putting off that. I have been surprised. So I didn't realize that the car payments have gone up so substantially.
Yeah.
And I've just recently been made aware of that. And somebody went in, and one of my clients, and said, they basically looked at even buying an existing car that was 2 or 3 years old. And by the time they figured out what their payment was, it was $900 a month. And this was for like a RAV4. Like, this wasn't like any BMW or anything. That $900 a month is it's crazy. And it impacts you being able to buy a property, which right now you need to do.
My thought financially is that until you buy your first home, if you live your financial life like a college student, so you've got your degree,
Agree.
you have the higher level of income than when you were in school. If you take and you live like you did while you were getting that degree financially and put that savings away, you'll have money for a down payment. You won't have to get into one of the down payment assistance programs
Yep.
and try and fight your way out of that. Even a 3% down payment you're going to move so much faster in your equity growth in a home.
Oh,
But
so glad you said
if
that.
you really do live in the budget that you want to buy a house, then you're going to be so much better off.
And it will happen. I mean, I know like when I had my first house payment, I've shared this before, my house payment was $1,000 a month. And
Ah!
it was like, we were like, how are we going to make
Yeah.
it? $1,000 a month. That's like
Yeah.
crazy money.
Who would pay
You
that
know,
much?
I mean, we bought our first house for, it was literally $100,000. By
Yeah.
the way, my interest rate on that was 8%. And we were thrilled. My parents were almost crying for us because they were like, we paid 16% interest rate or whatever.
Yeah.
So, I mean, at the time, we thought we were getting like, we were like, whoa, this is amazing, you know? So I still very much remember that. And I want you to know that you will, if you buy today, you're going to have that same story to share in 10, 20 years. And you're going to say, oh, remember when my house payment was only $3,000 or
Oh my
whatever.
gosh.
And that's the problem is right now, the other thing I want to debunk real quick, like this is a little side tangent, is one of the things that I think is important is to actually see what your kind of what that difference is for the year. Because people right now, when they're looking at their payment, they're saying, oh, but it's $500 more a month. And I've been kind of making spreadsheets. I know that you do this too.
Yep.
And I basically say, okay, that is $6,000 a year. Do you think that your purchase price is going, I mean, the price of that house, is it going to be more than $6,000 in a year? And I can tell you right now with Utah's growth and what we have for projections, yes, you will be paying more. So that's why you do want to refinance later. But kind of along on that line, there used to be an old way of thought of you need to save up 20% down. And that's the thing I want to touch on. And why is it not a smart idea anymore to really not buy anything and wait, for like my first time buyers, for example, to have the 20%. Now, if it's an investment property, that's a whole nother ball game because you have to have basically anywhere from 15 to 25% down.
Yeah.
But that's a whole different discussion. But for my first time buyers, that are like trying to save up, and they're like, well, I don't want to just put 5% down. I want to try to do 20%. But then they're thinking, oh, I'll wait 2 years. Why is that not a great idea?
Because by the time you save up your 20% down payment, you're going to be probably 10% behind on your 20%.
Can you buy the same house that you would have?
That's what I mean. You're going to be 10%
Yep.
behind because the rate of appreciation, you're always going to be behind in that effort to
Yes.
save up a 20% down. So the whole reason behind the 20% down payment for most people is not to make the overall payment affordable.
Mm-hmm.
It's to remove something called mortgage insurance.
That's right.
And mortgage insurance, what that is it's a risk-based insurance policy that the lender takes out for you and has you pay so that you offset their risk.
And just because you don't like it doesn't mean
no,
that it's like it's just what it is.
and
it is risky. It's risky for the bank to lend money to you if you're only putting a small amount down.
Imagine if you were lending out
Would you do that?
Your
Yeah.
own $300,000.
That's what I'm thinking.
You would want to minimize your risk, right? You would want to maximize
That's right.
the chances of you getting your money repaid, or you would want something like
A guarantee.
an insurance policy in the
Absolutely.
background to cash in and get your investment back in case the person you were loaning your own money to just couldn't repay you
Right.
for whatever reason.
Mhm.
Illness, death, which is the ultimate illness, right?
Right.
Or maybe not.
Yes.
Yep, you made me lose my train of thought
Yes,
there, Heather.
but-
Thank you.
but
Your side tangent
I'm gonna
bringing
jump
it another
in.
tangent.
I'm going to jump in on that because
well,
I'm glad we are in agreement on
Yes.
this right here.
Boom.
Yes.
Can I say one more
You
thing?
1,000% can.
Okay, I just priced mortgage insurance for somebody today, right? That was deciding whether they wanted to put 20% down or a 10% down payment. Okay.
Mhm.
Their interest rate actually went down 1/8% doing the 10% down payment. How much do you think this person had? Very high credit scores.
Okay.
Okay, they had a 785 credit score, so just impeccable credit. How much do you think that monthly mortgage insurance premium costs them per month by putting a 10% down payment instead of a 20% down payment. This is on a $500,000 loan amount. How much extra per month did that mortgage insurance cost them?
I mean, it's going to be like anywhere from 80 to 125.
$29 a month.
Okay.
$29 a month was, if they would have waited to put the extra 10% down, or if they had wanted
That's going to
to.
Cafe Rio. You know what I'm saying?
Yeah, like Cafe Rio.
Yeah.
Cafe Rio by yourself without any of the lemonade drinks.
Yeah,
or
that's not even including queso.
Yeah, whatever the cool stuff is.
Yes, because their prices have gone up. But yes, so
Get
but
off
you know
of Cafe
where we're
Rio's
going.
neck.
Yes, you can tell I might need lunch or something at this point. But the point on that, you're right, because a lot of times, like that mortgage insurance, I mean, everybody hates paying an extra fee. I get that.
Yeah.
I hate paying extra fees. But let's do the math on that. Let's even just say, because a lot of times I see mortgage insurance with different price point. It's like
$360 a year.
That's exactly right.
Is what they're going to pay extra. And it's not extra. It's actually going toward reducing the risk of the lender. So it is actually going somewhere.
And for them to get a house.
Right? Yes. Instead of saving up an extra 10% on a home.
And in a year, like let's look at that again. In a year, where has that house most likely appreciated? And is it going to be more than $360 that house is appreciated? Absolutely. And so I love that. And I will actually show people why even higher interest rates still make sense to buy. And mortgage insurance, I don't care about now, because I'm like, you know what? Here's the thing. Put your 5 or 10% down or whatever it is. And I'm like, guess what? If you still want to save your money, save your money. And then when you're either refinancing in a few years, you can put the extra chunk of money down, hit the 20%, get rid of your, mortgage insurance. There's other options out there, right? Yeah. And so that's the thing, is that your financial situation is also going to change, most likely, like, especially for a first-time buyer. They're squeaking in.
First-time home buyers now. I have a 3% down payment program out there. If you're less than a certain income level, which is $94,000 a year right now in Utah County, okay?
Yes.
I can get you up to $7,000 that can go toward that 3% down payment. And it's
amazing.
It's money that doesn't need to be repaid.
Really?
They are grant funds that the
Think
lender...
about your kids. For my clients that are watching this that have kids that are just about ready to buy a home, because I have a lot of clients like that. Listen to that.
Right. So you're not even putting the full 3% down. You're taking advantage of lower interest rates, right? So right now that interest rate is at 6.75. Yeah. It's a way to get into a house with reduced money out of pocket and start building. Right now, it's 5 to 7% a year. What was the equity growth in 2019 to midway through 2021? 17%?
17%.
Right?
In Utah.
Which is outrageous.
It's outrageous, but we had a lot of inflation. We had a lot of COVID things. There were a lot of reasons, and it just kind of, arguably, I mean, you can discuss this later too, is the housing shortage, because guess what? During COVID, we didn't build as much. We still were behind even from back in 2007, 8,
Yes.
Like we never did. And one of these predictions that I've said, and I know some people have gone, oh, Heather, and now they're like, oh, actually, you were right on that, is luxury homes. Because I do sell luxury properties. We have not been building them at a fast enough rate. And so we will have people probably moving here from California soon. I already know that.
Really?
Wave.
Why?
Well, because we've got wildfires, we've got all sorts of things going on.
Oh, weird.
But I'm already seeing that. I've already had a phone call even about that. And so we are going to see, like, we're kind of getting this other shift. Like, people have kind of stayed where they're at during this, like, shoot of interest rates up. And then now they're going to be coming back over. But we have a problem with even in all the markets, but I'm seeing it a lot in luxury homes too, because there's just not a lot of inventory. And to build, it's taking 1 to 3 years, depending if it's a custom build or not. And so you've got issues.
If you are thinking about buying anywhere near the Wasatch
That's what I was going to say. Yes.
Now is the time. Now is the time because we are running out of buildable space.
Well, we only have the mountains here and the mountains there,
Yeah,
right? We're
rapidly running out of
yes.
land. If you're not planning on buying something high density, which maybe that's what you want, is to get into a condo or a townhome, but if you want a single family home,
Yes.
now is the time to reach out and grab it. One, interest rates are higher, which means that prices
Less competition.
are lower. There's less competition. There's more opportunity to reach out to a seller and have them contribute toward paying for your
I just
closing
got
costs.
15,000 in closing costs for
There
a
you go.
client of mine and a buy down. So
Yeah, now
yes.
now is the time to strike.
Yes, that's why I have been just like, I'm like, listen, when interest rates are super low, yes, then people come to me and it's great. I mean, it's
It was
just a different market.
It's a
you
different
know?
problem.
It's a different problem. But I tell them, you will be paying a premium.
You
will
will.
pay a premium on this house because you're going to be up against 10 other people or whatever it is.
People that bought during COVID paid a
Yes.
premium for their homes.
That's right.
They paid a premium for their homes because of their ability to relocate, right? And interest rates being super low. And it wouldn't be uncommon to see 60 offers on a property within the first couple of
crazy.
hours of the property
And it was making me
live.
nervous for people that have been in this for a long time. Like, we don't want to go back to that. Like, I know that
No.
that sounds like tempting, and some people will be like, oh, that sounds so great, but I want what's best for my clients. I always put my clients first, and I'm like, that kind of a market is not best for buyers.
It's
It
also
is
not
hard,
best
and
for
it's not for
sellers.
sellers either. It's really tough.
Yeah.
Because it's like, it's hard because then even when you sell, what are you going to buy?
Oh,
You
and
know?
the weight gain from the crumble cookies that people send you.
Oh, yes. Oh,
Oh.
yeah, that's
Side effects. Side effects.
I'm still losing
From
that. Yeah.
25 people sending
Well,
you as a
my
homeowner your
problem
crumble cookies.
was also that I was so busy writing offers or doing things that I
Oh,
don't even.
the
You would think you'd
arthritis.
get thin, but you're like not getting thin. You're just eating bad cookies
I like-
at midnight
oh.
in order to write offers.
I
and
was
choose.
just thinking of you
Totally.
handwriting every offer like you ever
It's like,
handwrote
I still have
anything
like trauma there, but
in the last 25 years you've ever written
Totally.
anything but a note with a pen.
But I love showing people the numbers. I
Yes.
love showing people the data and the numbers. And that's one reason that I definitely recommend Eric and talking to him. And I tell people, even if you're not sure you're going to buy a house right now, like this is also a big misconception out there. They think I'll call a loan officer later when I'm looking and ready to buy. And I always say, no, you call first. Let's get you pre-qualified. Let's get a plan. Because
Yeah.
that's one of the things that I really appreciate about Eric is I'm like, if you're not ready now, that's totally fine. I am a no pressure kind of person. This has to be your decision. I can tell you the pros and cons in every market, but at the same time, I'm like, you've got to get a plan because you've got to know when you can. And most times, and I will say, when I have clients come to me, they usually, like if they're first time buyers, they'll say, we probably have to wait a year or two, or we're not qualified yet. I'd say 80 to 90% of the time, they're actually qualified.
Yeah,
And they don't even know because they think, oh, but I don't have 20% down. I don't have this. And I'm like, no, it's okay. And we're going to walk you through it.
Yeah, that's their preconceived misconceptions about what they can or cannot buy or what they can or cannot afford. And it is shocking how many people come across our sphere or our desk that can absolutely go out and buy right now without a problem. They just don't know what they don't know.
That's exactly right.
So you say you're low pressure or no pressure, and I say I'm high pressure. I'm high pressure, and I'm very biased toward you making good decisions.
Yes. Well, and I would
Right.
say that is the area where I do pressure. But
Yeah.
I'm not a high pressure to you have to buy right now. No, if it's not the right time or season for you, I can understand it. But
Yeah.
again, let us help you know if it is. Because a lot of people have already made that decision. They're like, oh, my parents told me I probably won't qualify for years, or
Yeah.
this or that, or and it's like, no, come to me if you want to own, and everyone should, by the way, you should own property. It usually is your largest asset before retiring is your home.
Absolutely.
And I always say it's better to pay yourself. Like I would rather be eating top ramen. Isn't that what it's called? Ramen? Yeah.
Yeah.
The
Yeah.
the Nissan cups,
Yeah.
I'd rather be doing that and having an appreciating asset and maybe taking a little, maybe you're not going to have your DoorDash as much or whatever it is. It's like you may have to have a few little sacrifices, but it does work out.
Do you know what that sacrifice gets you though? Okay.
Something amazing.
Well, not just a home to live
Yes.
in, and you don't have to worry about somebody raising rents on you, right? Just
Oh, or month to month.
the
Yeah.
peace of mind that comes from that. A lot of things that people don't think about are the tax implications
Oh,
of
yes.
owning a property and how they're usually giving themselves a little bit of a raise
That's exactly right.
by
Give to the
just
government more or have a little bit of some tax incentives and breaks.
yes,
Mm-hmm.
right?
Oh, so glad you touched on that because I forgot to touch on that because
Yeah.
that's where people that have been renting for so long, like I'll talk to somebody and they're like, oh, I'm paying $2,500 a month in rent. And I'm like, okay, we could do some different things and get your payment not very much higher than that. But again, it's so important because, like you're saying, tax breaks and just even that stability, because there's nothing worse than if you're living right now on like a month to month lease. Like people somehow celebrate that. Like they're like, yeah, I only have a month to month lease.
I
And
have
let me tell you
freedom
what.
of mobility.
Yes, and they say, and guess what? It's also freedom of mobility for your landlord to
Yes.
just all of a sudden say, hey, by the way, in 30 days, you're going to be out.
You're
and
free.
Good luck. You're free.
Yeah.
So it goes both ways. So yeah, while that is kind of nice for you in a way, it's not totally great always. So I'm always like, just know what the drawbacks are.
I'm gonna go off on
Yes.
Let Eric Smart go off on a
Yes,
tangent.
you do that.
How about that,
Yes.
guys? Freedom of mobility. People think that renting a home, they can have the freedom to pick up and move whenever they want, even though they're usually locked into a year-long lease. But their freedom of, I can move to Cleveland, Ohio, if I want to. Not to get all over the Rust Belt, but whatever.
Yes.
Right, I digress. Right, Cleveland, Ohio. That's right out of the back pocket.
Yeah, I was like, wow. Okay.
Heather believes in building wealth through real estate. I don't know if
Yes.
she's ever touched on this. I don't think I've seen it in one of your podcasts
I was going to say,
yet.
people don't know that about
She's
me, but I feel pretty strongly about it.
Big proponent with this, and she has helped, I don't even know how many clients, build their net worth through real estate. What people don't take into account, if you want the freedom of mobility, is if you've lived in your home for a year, typically you lease for a year. You buy and you live in that home for a year, turning that property into an investment property and cash flowing and moving to Cleveland, Ohio. Hopefully not good citizens of Cleveland, Ohio. I don't respect you.
Yeah.
Too soon?
No, it's all good. All good.
Okay, yeah.
I thought you were going to say Alabama because my kids just stole my grandbaby and went to Alabama. So anyway, but that would be
grandbaby
the
thieves.
yes.
My point is that you can still have that freedom of mobility the same way if you were renting.
100%.
Only you're going to be looking at keeping an asset that's going to appreciate over time and do some real financial benefit for you. And you can hopefully move on and rent this current property out that you want your freedom from, and move on and buy another property in your next locale and do the same thing. You still have the freedom of mobility. You just need to plan a little bit for it.
100%. You can always sublease.
Yep.
You can turn it into a rental. Whatever. There's so many different options. I completely agree with you. I just recently even talked to somebody who he was a multimillionaire and he's like, I'm just going to sell everything. And I'm like, and keep it in the bank. And I'm like, do you realize what your dollars in the bank depreciate because of inflation?
Yep.
That amount of money is going to depreciate, where he would be better off just parking it on a quadplex, getting a property manager and just getting mailbox money. He would be far better off doing that
How do we know
than
that Heather was a child of the 80s, everybody? She said quadplex. Quadplex that she got the loan from an SNL.
That is funny. I am a child of the 80s and I embrace it. But yes, but I would just say you're better off figuring out something else. And if you have a question and you're saying, I need some more mobility, call me, call Eric. We can help you. We can say, hey, here are some options of what to do, what to buy, how to give you that freedom, because you can have that freedom. And if you look at the wealthiest people in the world, they all own real estate.
All of
It's
them.
all of them. It's not even close. There's not even anyone that doesn't own real estate.
I'm thinking of my first real big investor that I ever did a deal for. And I met this guy. He was a Hollywood showrunner. Okay. So this guy had he was asking me about Gunsmoke. He started
Gunsmoke, child of the 80s.
No,
No,
child of
70s, 60s. I don't know, but I do know.
60s.
I know of
He started
Gunsmoke.
working in Hollywood in the 60s.
Okay.
And what he learned really quick was he was going to buy homes, turn around and seller finance those homes and collect note income. So he had a portfolio of $130 million that he was rotating through on seller financed properties, and he had another $200 million worth of properties that he was renting out.
Mm-hmm.
This guy was worth a fortune, not a humble person. He was not a joy to work with, right? But he was the first investor that I worked with and this was back in 2009 is when I roundabout got one of his properties to help him refinance and started looking through his taxes with him and seeing how he had structured his life to never, ever, ever work again if he didn't want to, if he wasn't addicted to the Hollywood scene. He had so much residual income,
Just passive income
coming through wealth in real estate, that he started out very small and just built his way up. And
I've had teachers, just FYI, that are worth quite a bit now. Because their net worth, because they just bought something small, one property extra, just little bit at a time.
What he did was in the 1960s, he tripped across a very savvy real estate agent that had been his real estate agent by that time for almost 60 years or something.
Wow.
I can't do the math. So should I be your loan officer?
40. Yeah.
Yeah.
Okay.
That he stuck with this person, believed in what they were telling, just a trustworthy person. The Heather Grimm of the 1960s met with this gentleman and just really helped guide him through how to invest in property in a savvy way. And honestly, it reminded me of some of the clients that we've worked with together that you have really helped, like, get them into the right opportunity at the right time to build
It's
equity
all about that.
and passive cash flow. Heather's network, you don't know me from anybody. But if I have clients that are seriously thinking about any sort of real estate investment, I have them talk to Heather. I have them talk to Heather because she's honest, she's professional, she's fun when it's appropriate to be fun, like on a podcast. But she always gives honesty and sincere advice, and she always works her stinking tail off behind the scenes to find the right properties and the right way to take advantage. Not take advantage of a seller, but take advantage of an opportunity. And it's never not worked. There's not one person that I've worked with you on that has ever come and sidelined gone,
yeah.
Heather kind of blew it for me. It has always been unequivocally, Heather has given me the right advice time after time after time, and I have taken advantage of that, and I have grown exponentially in my portfolio. So if you're thinking about doing something in real
Well, and
estate,
thank you, by the way. But I do
no,
and I know you take your job very seriously as well. And
I
that's why we work together because I'm like, I've had other people where I'm like, sorry, that's not going to work anymore because my clients come first.
yes,
And I want to get them the right product at the right time
yes,
and set them up for success for the rest of their lives because it will change their lives.
it is the high pressure situation of
Yes.
making good decisions, and that's what you help people do.
And I think an expert. And that's why I like
Yeah,
Eric. I mean, you've also got to know, you've got to have a good team. And I've got clients that they're close friends of ours. And the best compliment I think I ever received was somebody was kind of looking through their finances and I was talking to them and they said, they have finances of people that are 20 years older than they are.
yeah,
And they said because most people their age do not have a portfolio like this, and they are going to be set up. They said somebody maybe in their 60s would look like this on paper.
yeah,
And they said they were shocked when they actually met them and they were 20 years younger. And they said that was like completely shocking. And that is the reason that I feel so strongly about like first time buyers, even right now.
yeah,
And in all different markets, whether you're luxury, investor, first time home buyer, but it's so important to get in at the right time. And that's why I work with Eric as well, because I'm like, I like to just have these plans. And then that way, like I said, you talk to Eric, he puts a plan together. He's saying, hey, this is, what you can buy, when you can buy, and then give it to me the where, because I love doing the where and saying, hey, and a lot of times I have off market deals. I have things that
yeah,
no one knows about. I've had clients walk into like 10%, 20% equity because somebody's just like, hey, we have to make our numbers this month. It's like maybe a new build. We'll just cut this one off. I mean, amazing. Like I just had a client that said that he's probably going to be able to pay for his med school. He went to med school, he qualified, he bought a small little house. And he said, while everybody else was renting, he's like, they've lost all of that money. And he said, we bought a dumpy because we found this dumpy $250,000 home in St. George for him. And he was like, but we like redid the carpet. I was like, hey, this is a carpet and paint kind of
yeah,
thing. And they bought it. He's lived there the whole time he's in med school. And he goes, Heather, with what I could sell that for, because I just ran some comps. And I'm like, it's basically 150,000. He's made 150,000 off that house. And he's like,
wow,
my friends all have medical bills, like debt, just medical school debt. He's like, and they've lost all that money to renting, where he's like, I'm walking away. He's like, I can turn this into a rental for passive income. And he said, I mean, or if he wanted to just even sell the house, he's like, I could just pay off all my medical school bills. He's like, and we lived for free for the last 40 years. So I
yeah.
mean, that's amazing. And so that's why it's so important. Um, it's just so important to even just explain kind of what's happening in your life and have a good loan officer in your life. I think Eric's fantastic. I've worked with him. He's done many loans for me, for my clients. And then also, like I said, like he can kind of give you the nuts and bolts on what you're qualifying for, what like kind of timeline. And then I can help on the, hey, what is it that I know is going to match up really well with you? So I as we kind of keep going into 25 and while we're kind of wrapping this up, um, it's just so important right now. And I cannot stress this enough. Buy something right now because, again, all the kind of people out there talking are saying 2026, it's going to be a fire market. And I think we are going to still see, we're going to see steady growth this year. So this year, we're still going to see growth. But just know, all of those people on the sidelines that have been waiting, they're about ready to come back into the market, and I'm
Yeah.
seeing it right now.
Well, can I
Yes. Jump in.
I know you're gonna
No, you do
you're gonna
this.
end this thing soon, and I'm gonna be sad if I don't mention this. And who wants to see me sad? Not me.
No.
Um, who you work with matters, okay?
Yes.
And for your audience, honestly, I want you guys to play a game. I play it sometimes with my wife, who knows Heather and loves Heather to death, and it's called 6 Degrees of Heather Groom. Anywhere you go in this state, If you ask in a restaurant, somebody is going to know Heather Groom. This is a fact. Who you work with matters, because it's not just that they know Heather Groom, it's that they don't just like Heather Groom, it's that they love Heather.
Aw.
Okay?
It's what makes kind of a general practitioner versus a specialist. You know, you
Yeah.
wouldn't go to a general practitioner for brain surgery. And that's what I tell people. I'm like, you want to go, if you're going to invest, you better go to a realtor and somebody and also a loan officer that understands investments, because they own them, because they've done them, they've been around. Don't go to the person that has no experience in it whatsoever and then think that it's going to turn out for the best, because like they say, everything turns out. Real estate's a great investment no matter what. It's just how much time.
Every professional needs to start somewhere.
Yes.
It doesn't need to be with you. It
Right.
is my thought.
Right.
Right?
Well, and I've also learned, stay in your zone, because I've learned there are certain things that I really am not in. I love real estate. I'm like the Bruce the shark, from Nemo. It's like when there's like blood in the water, I'm like, real estate, yeah, like I love it. Like I'm like, So I seriously just like go crazy on it. That's how you know that you love what you do. But I will say there's certain things in my life that I hate, like learning my passwords, and I am not so great at tech,
Huh?
right? And so because of that, I'm like, I know I don't want to even dabble in that. It's like we all cannot be experts in every area. What I've learned about life, and the one of the secrets, do what you're best at. So if you're a lawyer, if you're an accountant, if you're watching this, do what you're best at. Then know that I do this 40 to 80 hours a week because I love it and because I know what to do, and I've gotten very specialized in it. Yes.
This is not my podcast.
Yes.
So everybody knows. I'm a guest here. But can I ask you a complete
Yes.
side tangent?
Totally.
Nothing to do with real estate.
Okay. Yes.
Just because you brought up technology.
Okay.
And I'm so fascinated by this idea. Would you do Neuralink? Do you know what Neuralink is?
I don't even know. See, that answers the question.
Neuralink is this technology that
Okay.
Elon Musk is working on, and
I'm sure my husband knows about
it's
this.
an implant of AI that gets put into your brain.
No, I would not do that.
Heather, it's supposed to be like you have ChatGPT in your head. You're already
The only way I
super
would do
smart.
it, the only way I do it is if it memorized all my passwords
It
for me.
would.
Maybe that's a consideration.
It would.
But, that just sounds kind of weird.
People
I don't
are
know.
doing it. People are doing it. Yeah.
Is this a real thing? I don't even know.
They-
Okay, I
they-
guess we're gonna have to have a podcast about
They've
this
done some
later.
beta on this, and
Wow.
it's mainly been with people that have been deformed
Yes.
in some way. So I think there's a veteran out there that lost his arms, right?
Wow.
And so he's got prosthetics now, and they put the Neuralink in him, and he's got full usage of his prosthetics, like they were my arms, more sculpted, I'm sure.
Yeah.
But my arms, right? Just
Right.
just with this thing.
Yeah.
And I don't know if they've gone to these links yet, but
Yeah.
it's supposed to be like you have like Google.
Okay.
in
Well,
your
this
mind.
is a good way to wrap up, because apparently I'm gonna have to do some research.
Heather, quit
being
a
on
bigot.
this. I
Get
guess so.
Neuralink.
Yeah. Okay.
Quit judging people.
I don't know. I don't know about that. Okay. Book for the year. Anything that you recommend, real quick, and then this is probably wrapping up.
Book for the year.
Yeah. Like what's one of your favorite books?
Okay, so I'm gonna go real light, and then
Yes.
I have a couple different favorites.
Go for it.
Light side, I'm a huge Los Angeles Dodgers fan. Like, born and raised. This is one of the topics that I will go down a rabbit hole on. When I was a kid, this is not a serious book, Heather,
Okay.
okay.
I'm fascinated.
but it was inspirational to me.
Okay.
Okay. There was this guy, played with the Dodgers and a few other teams, journeyman baseball player. His name was Jay Johnstone, known less for his baseball skills, although Major League Baseball player, right? So
Okay.
you have to be extremely talented.
Yeah.
And more for his zany antics,
Okay.
right? Like practical joker, super funny guy. Very, very light book. Hilarious. I'm just tears streaming down my face. I read it 6 months ago, and I was crying like I did
Okay. Now I need to read this.
when I was 8 years. You probably don't want to read
No,
this.
tell
But
me.
like I was 8 years old.
Wow.
Again,
Okay.
reading this book, just laughing so hard. Let me know that I can just get out there and be me, my wacky, normal self. And
Nice.
there's people out there for me that are gonna vibe with it. So I really love
Okay.
that book, and
And what is it called?
it's called Temporary Insanity
Temporary Insanity
by Jay Johnstone.
by Jay Johnstone.
You heard
Okay.
it here first.
Yes,
Book
you
from
did.
the 80s that
Ooh,
you
for
can get,
these Gen X clients of mine, and I might be one of them,
get it in
then
beat
I'm
up
gonna get this.
paperback.
Okay.
I'll give you a copy.
I'm
I've
excited.
got 3.
Yes. Well, okay. Well, thank you.
Well,
That's great.
it's a gift. The
Yes.
book that I'm reading right now that's
Yes.
actually really heavy and really serious is Hamilton
Ooh.
by Ron
Ooh, I've
Chernow.
heard that's amazing. Yeah,
Um,
yeah.
Wow.
Yes.
Just wow. Talk about somebody that triumphed, very complicated, very hard
Complicated
life,
individual. Absolutely.
built himself up from absolutely nothing to being possibly second maybe to Jefferson
Oh yeah.
in the
Absolutely.
founding of our country.
Mhm.
That nobody knows about except for the musical,
Exactly.
right? This book is
I've heard it's so amazing. So you know
well,
what? You just gave me a good idea. I'm gonna put that one on my Audible.
oh,
Okay.
that's what I'm actually I said I was reading it. I'm listening to it
Okay.
right now, and it is
I'm gonna do that.
wow,
I've heard that. I've had
Yeah.
that a few people. So
very wow.
Ooh, okay. Thank you for that. Well, thanks for joining us today, and we look forward to having you again. And we'll probably see Eric again on another future episode. So again, thanks, Eric Smart with Aries Mortgage. And anyway, thanks for tuning in. Bye-bye.